Imagine waking up tomorrow and finding out that your government no longer wants a share of your salary. You earn money, you keep all of it, no income tax, no tax deducted from your paycheck. Sounds like a fantasy, yet for millions of people living in Dubai, that is normal life. Every month, workers receive their salary and the government takes exactly 0% of it, which raises a strange question. If Dubai does not tax people's income, how does the government make money? Dubai's tax-free reputation has turned it into a magnet. Entrepreneurs, investors, influencers, even people who have never visited Dubai know one thing about it: no income tax. But that reputation hides an uncomfortable truth. Dubai is not giving away free money. Someone is paying. The story begins in the desert. Just a few decades ago, Dubai looked nothing like the city we know today. Then oil was discovered, and suddenly money started flowing in. But Dubai faced a problem that many people don't know about. It never had that much oil compared to its neighbors. So they made a gamble. Instead of depending on oil forever, they would use oil money to build something else. And for that plan to work, they needed a powerful advertisement: no income tax. Think about it. If you are an entrepreneur earning $1 million a year, keeping 100% sounds much better than giving a large chunk away. People arrived, businesses arrived, money from every corner of the world started flowing into the city. But we still have the same question: how does the government survive without income tax? The answer is simple. It charges people in other ways, lots of other ways. Want to buy something? There is VAT. Want a business license? There are fees. Want property? There are charges. Want visas, permits, registrations, or approvals? More fees. Dubai built a system where people are not taxed heavily on what they earn. They are charged when they spend, build, invest, or operate. It is less visible, but it is still money flowing to the government. And then there is another source: government-owned companies. Airports, real estate projects, ports, financial zones, these generate enormous amounts of revenue. In a way, Dubai operates partly like a government and partly like a giant corporation. The city attracts people, people create economic activity, and the government earns money from the activity itself, not directly from salaries. It sounds brilliant, and in many ways it is. School fees can be expensive, healthcare can be expensive. Keeping all your salary sounds amazing until you realize some costs arrive through different doors. The tax bill did not disappear, it simply changed its shape. And recently, another change happened. For years, businesses enjoyed almost no corporate taxation. Then in 2023, the UAE introduced a federal corporate tax for many companies. Not huge by global standards, but significant. A reminder that even tax-free systems evolve when economic realities change. Because governments always need revenue. The question is never whether money will be collected. The question is where it comes from. And that brings us to the bigger picture. Dubai's model works because it attracts talent, investment, tourism, and global business. The city has become one of the world's great crossroads. But every economic model depends on something. Some countries depend on income taxes. Some depend on natural resources. Some depend on manufacturing. Dubai depends heavily on being attractive, on remaining a place where people want to move, invest, and spend. The moment that attraction weakens, the math becomes harder. Which leads to an interesting question. Is Dubai proof that income tax is unnecessary? Or is it simply a unique city that found another way to collect money? Because in the end, governments are a lot like magicians. The audience focuses on one hand, no income tax, while the real trick is happening with the other. And whether that trick can keep working for decades to come remains one of the most fascinating economic experiments in the world.